Ladies and gentlemen, good day and welcome to the Hinduja Global Solutions Limited Q1 FY23 earnings conference call. From the senior management, we have with us today Mr. Partha Desarkar, Executive Director and Group CEO, and Mr. Srinivas Palakodeti, Global CFO. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rushabh Shah from Adfactors. Thank you, and over to you, sir.
Thank you, Renju. Good evening, everyone, and warm welcome to the Q1 FY23 results conference call of Hinduja Global Solutions Limited. We are joined by Mr. Partha Desarkar, Executive Director and Global CEO, and Mr. Srinivas Palakodeti, Global CFO, to discuss the Q1 FY23 results and the key developments during the period. Before we begin the conference call, I would like to mention that some of the statements made during the conference of today's call may be forward-looking in nature, including those related to the future financials and operating performances, benefits and synergies of company strategies, future opportunities, and growth of the company's services and solutions. Further, I would like to mention that some of the statements made in today's conference call may be forward-looking in nature and may involve risks and uncertainties. I would further like to mention that if there is a call drop during the course of the conference call, please bear with the management. Thank you, and over to you, Partha, sir.
Thank you, and a very good evening to all of you who joined us for the conference call for our first quarter earnings for this fiscal. We do have a presentation that we have hosted on our website, and I am going to refer to the presentation as I talk to all of you. Hopefully, you've had an opportunity to go through the presentation, are able to refer that as we go through this call. So I go to slide 3 of the presentation deck. I'm happy to report a very strong revenue growth of 14.1% year on year. Pleased with this number because there were many concerns raised when we divested the healthcare business, whether the rest of the business has the momentum needed to grow the business. The proof of the pudding is in the number 14.1%, which I believe is a fairly handsome number under all circumstances. The net profit was 73.3 crores. Again, a very good number to talk about because it's 9 times the year-on-year growth on a like-to-like basis. And Pala can share with you, and our fact sheets have the comparison so that you can see for yourself. Our customer experience services and the digital solutions across all our geographies are seeing robust demand. We have rewarded our shareholders like we've done in the past, an interim dividend of rupees 5 per share. And the total dividend outgo as a result of this announcement is to the tune of 21 crores. So I just want to make sure that my voice is audible. Can somebody confirm that my voice is audible?
Sir, your voice is audible. Go ahead.
Perfect. Thank you very much. So I will now move to slide 4. The slide 4 is a short financial dashboard. It shows you the revenue growth from 800 crores to 912 crores. This is the 14.1% growth number that we talked about. EBITDA has had a slight dip, 16.1% from 46 crores to 38 crores, whereas profit before tax and profit after tax has seen really good numbers. Let me spend some time in trying to explain to you why the EBITDA has taken a hit. It was not a cause for concern. Most of the degrowth in EBITDA has come because of our Brexit support services that our UK business was doing has come down quite a bit. As you know, it's been a while that Brexit has been operational, and therefore the trader support services that we used to do for the UK government, the demand for those services have gone down, and therefore there has been a reduction in volumes from that particular contract. So that is number one. Number two, almost all our geographies are seeing good ramp-ups, and we are hiring people for the rest of the year, and the hiring costs are reflected in quarter one, but the revenues associated with those hirings will show themselves in quarter two. So these are ramp costs that are showing up in quarter one, causing some pressure on the EBITDA, but will convert itself to revenue and profitability in quarter two. So hopefully that should address any concerns that you may have on the drop in profitability. With that explained, I will move to slide 5, which basically gives you a flavor of which all businesses have done well. The consumer engagement solution services onshore in US, Canada, and UK have done well and will continue to do well even in quarter two and in the rest of the year. Offshore India, Philippines, and Jamaica showed good growth from existing accounts. We opened up a new center in Mysore in July to meet increased demand for our non-voice support services from India, and that's something that we are very happy with. The digital business continues its strong momentum. Its business grew 57% on a year-on-year basis. Cloud, security, and automation practices are the ones that are growing very well. And the fact that we are doing well in digital comes out from the third bullet, actually. Last year, same quarter, the contribution of Edge's revenue from digital services was 9.8%. Now in quarter one for this fiscal, that is up by about 14.3%. So it gives you a sense of the fact that the digital business is really growing fast. We've signed out about 28 digital-led engagement across existing and new clients, focusing across robotic process automation, cloud, analytics, AI, and digital customer experience. We are ramping up the team as well. You must be hearing from other IT firms as well that there is a big demand for labor. So we find us facing the same demand for labor. There is enough business available. The challenge is to people to hire in time to be able to deliver revenues. Move to slide 6 to give you more color on Diversifier, our Australian acquisition that we did in February of last year. Its revenue grew about 23% on a year-on-year basis. Its EBITDA margin is about 22.4% for the June quarter. Signed up 8 new logos since acquisitions in February and got a healthy sales pipeline. It's a small business, but it's doing really well. Very happy with the kind of results that it's able to give. I think in the last quarter we talked about real estate footprint consolidation. A lot of work has happened in that. There is a contrasting situation on what the government mandate is for bringing people back to work. For example, in Philippines, the government has mandated that 75% of the people have to come back to work. India also, and that mandate has already come through. In India also, we are heading towards a particular mandate from the government that will determine a certain percentage of people that need to come back to work from office. It's not yet implemented. It's a little futuristic, but we will see that some of the expenses that were low last year because we were not operating physical office infrastructure are going to come back because at least in India and Philippines, the government has mandated that we need to bring people back to work. But in US, UK, and Canada, the number of people working from office continue to be minuscule, as high as 90% of the people are still working from home. And it's likely we don't see any change in those stats, at least in the next 6 months. So we are rationalizing our footprint. We've closed 3 centers in quarter one, 2 in the US and 1 in Canada. 2 more centers are to be closed in August in Canada. The annualized savings from this is expected to be $640,000. Today, we have 35 global delivery centers across 7 countries. UK will move to a smaller site in Preston in quarter 2 of FY23. That will yield an annualized saving of about $1 million effective quarter 3. And the good news is we've been able to actually sell some of the buildings that we used to own. We sold a property in UK, which was in London in the Chiswick area. We moved to a much smaller rented place. And a property in Kentville, Canada has also been sold, and the proceeds have been realized. This is also sometime in August, so you will see that these numbers reflecting in our numbers for quarter 2. So that has been our effort at real estate footprint consolidation. Slide 7. Slide 8 is a little forward-looking. We do see the tightening macroeconomic environment, but we remain cautiously optimistic. We believe that the coming quarters will see good growth in both revenues and profitability. We will continue our efforts at real estate consolidation to the extent that our existing leases allow us to consolidate. We are taking a very hard look at general and administrative expenses. With the sale of our healthcare business, there is opportunity for us to reduce our general and administrative expenses. We are working very hard on that. And the ramp costs that I mentioned in US and Canada was actually converted into revenue and profit in quarter 2, 3, and 4. So focus continues to be on winning new clients. We put our CES sales team and the digital sales team together so that they're selling with one go-to-market strategy. Our new growth would be through hub and spoke model to leverage work from home. So we will not end up with the large footprints that we've had in the past of centers with 400, 500 seats. We're going to do smaller hub spoke centers. We are looking at acquisitions to improve our delivery capabilities for the digital business. This is nothing new. This is something that we've been doing for quite some time now, evaluating acquisition candidates in the areas of analytics and robotic process automation. So that effort continues. So far as a quick update on the merger with Next Digital is concerned, many of you would have seen that the company NCLT, by its order dated 29th of July, has directed to convene a meeting of equity shareholders on September 2, 2022, to consider approval of the scheme of arrangement for the acquisition of the media and digital businesses. Our buyback of around 975 crores based on FY22 audited financials will be announced at a later date upon completion of the requisite approvals and in compliance of the relevant portions of the Companies Act, SEBI listing regulations, and SEBI buyback regulation. We expect this to take place in the second half of FY2023. With that, the general update that I had planned for you is now done. I am going to hand it over to Pala, my CFO, with a caveat that Pala has got a bad throat. He also has slight fever, so if you have problems in hearing him, just ask the question, and we will try our best to answer that in the Q&A section. So over you, Pala.
Thank you, Partha. Welcome everyone for joining this call. I want to check, is my audio okay?
Yes, sir, your audio is okay. Go ahead.
Thank you. So I will move to slide 11. This is the summary of the financial performance. Revenues for the year, for the quarter ending June 22, came in at 912 crores. That represents a growth of 14.1% in rupee terms over the quarter ending June 21. And these are all for the existing business of digital, CX, and HRO. And since we have sold off the healthcare business, those numbers are excluded from the quarter ending June 21. So revenue growth of 14.1%. If you recall, we had done the Australian acquisition the company got diversified towards end of February 22. So it was not there for the quarter ending June 21. So after the 14.1% growth, 5.1% growth is accounted from the diversified acquisition. And on the rest of 9% has come in from the organic growth across different sectors. Coming at EBITDA, Partha did talk about the growth in the drop in the reasons for the drop in EBITDA between quarter ending June 21 and the quarter ending June 22. But if you look at it on a sequential basis, if you look at the quarter ending March 22, quarter ending March 22 is the first quarter post the sale of healthcare business. And quarter ending June 21, there are some allocations, assumptions on the cost. But if you do look at the margins between quarter ending March 22 and quarter ending June 22, you will see there is a significant increase in the EBITDA margin from 0.6% to 2.3%. On a sequential revenue growth basis, revenues have grown 5.4%, out of which 2.9% came in from the timing difference of the diversified acquisition. Quarter ending March 22, we had little over a month of diversified revenues. Quarter ending June 22, we had the full 3 months of diversified revenues. So overall growth of 5.4%, out of which 2.9% is from acquisition and 2.5% is the organic growth. Moving on the interest expense, we are really a zero debt company. So whatever you see is primarily because of notional accounting charge because of Ind AS lease accounting treatment. The only other thing to call out is the other income. That total amount is 132.5 crores. So that had 66 crores coming in from the foreign exchange fluctuation. Rest is primarily coming in from interest. And this foreign exchange fluctuation is basically driven by the exchange rate movement. For instance, you would know that the dollar has appreciated against most of the currencies. So we have dollar deposits in Philippines, Mauritius, so all of them have to be remeasured at the rate as of 31st March. And similarly, we have dollar deposits in Jamaica, where there has been an appreciation. So this is the net impact of the overall FX fluctuation. At the PAT level, there's been a significant growth on a sequential basis from 7.6 crores to 73.3 crores. And if you see on a sequential basis, it was a marginal loss of 0.8 crores for the quarter ending March 22. That has gone up to 73.3 crores for the quarter ending June 22. Moving on to the next slide. This is the dividend payout. The dividend for the quarter ended June 21 was 7 rupees per share. Please bear in mind there was a 1:1 bonus given in Q4 of FY23. So the expansion, the equity base has doubled. So on a like-to-like basis, the 5 rupees share should be seen as a 10 rupees per dividend share for the quarter ending June 22. And if you look at the payout ratios, the dividend of roughly 21 crores accounts for about 23.3% of the standalone profits, or about 28.5% of the consolidated profits. And again, you would see from a payout perspective, there's been a significant increase compared to the quarter ending June 21. Moving on to slide 13. This is a brief summary of the summary profile. Our book value is, we have a net worth of 7,982 crores, Our current market price is 1346. Our share price is trading at a P/E of 15 on a trailing 12-month basis. And we are a gross debt, we have a small amount of gross debt. But effectively, we are a zero debt company. It's about 3,032 crores of cash. Moving on to slide 14. As I said, we have a small amount of debt as of 30th June 22. Our ICDs to related parties is 1,215 crores. We have cash of 3,372 crores and debt investments of 2,568 crores. This also reflects the impact of the exchange rate between 31st March and 30th June. Moving on to the next slide, slide 15. The capex for the quarter is 26 crores. Please bear in mind the capex of 158 crores for FY21 and 237 crores for FY22. That is based for the full year, including the healthcare business. But for Q1 of FY23, we are at about 26 crores. DSA days, there has been a increase between March 22 and June 22 of about 6 days, but it's in line with what we had as of March 21. And we are keeping a close tab on this, and there are no areas of concern given that we have a very solid customer base. Moving to slide 16. This is revenue by delivery location. So UK and USA continue to be the largest. USA at 30%, UK at 26%, Canada is 17%, India is about 12%. The revenue by origination, US continues to be the largest at 37%. UK is about 30%, Canada is at about 16%. Moving on to revenue by vertical. With our growth in our UK business, the public sector and others account is the largest one at about 34%. Media and entertainment at 13% and telecom at 15%. So if you combine these two, telecom and media, that would come to about 28%. Retail is at 19%, and banking and financial services come in at about 17%. From a client concentration perspective, as we have said earlier, post the sale of the healthcare business, there has been a reduction in the client concentration. So the top customer accounts for about 12%, the top 5 at about 40%, and the top 10 customers account for about 56%. Looking at coming to channel mix, as Partha mentioned, we have seen very strong growth in our digital business. And share of digital has gone up from about 9% a year ago to 14%. Voice accounts for about 17%, and non-voice accounts for about 12%, which is essentially what we do for our HRO business, as well as we do some amount of work non-voice from India for an international client. Moving to the next slide, slide 19. This is the stock price movement. This has been adjusted for the bonus issue. Moving on to the next slide, on slide 20. This is the overview of the transaction with Next Digital, subject to necessary approvals. As Partha mentioned, after the board approval and getting the necessary approvals from stock exchanges, etc., NCLT has asked for a meeting of the shareholders of HGS to be convened on September 2nd to consider the scheme of arrangement. Should this approval come through, we would proceed with the next set of approvals required. And just to recall, this acquisition is non-cash. Shareholders of Next Digital will receive 20 shares of, for every 63 shares of Next Digital. Their shareholders will get 23 shares of HGS. On completion of the transaction, the share capital of SGS will go up from about 4.18 crores to about 5.35 crores, which is roughly about 52.4 crore shares. And next digital shareholders would own 20.4%. And the promoters' holding would drop from 67% in SGS, the current number, to around 66.60% once as and when the next digital transaction is completed. That's all I had in my section. Please do, we'll open up the Q&A session after this. So I'll hand it back to the moderator for the Q&A session. And once again, thank you for joining on this call.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Saloni Desai from Omkar Investments. Please go ahead.
Hello, am I audible?
Yes.
Yes. Yeah. So firstly, congratulations, sir, on good set of numbers. I had two questions. So is there any more M&A deals expected in this quarter, or are there any in process currently?
I cannot give you a specific reply to that question because that's very forward-looking. I'm sure you're aware of that. We continue to evaluate M&A deals on a day-by-day basis. So yes, we are looking at and evaluating M&A deals as we speak, but that is business as usual. I cannot confirm whether that is going to close in this quarter or not.
Okay, all right. And I had one more question. So digital contributes to approximately 12% to the total revenue. So how much? Sorry?
14%.
14%. So I just wanted to know, like, how much will digital contribute by the end of this fiscal? Like, can we expect it to grow by approximately 30% this year too?
Again, I don't want to give you a specific number, but aim is to increase the digital content of our revenues significantly.
All right. Yeah. Thank you, sir. That's it from my end.
Thank you, sir.
Thank you. Next question comes from the line of Anand Onia, an individual investor. Please go ahead.
Hi, good afternoon. I need to understand one thing. A few months back, in one of the interviews, Partha said the EBITDA margin for the business, retained business, is in 2 digits. But we can't see that numbers which is reflected. Second question is about the buyback. You were saying that this is a non-cash thing, but the buyback is structured in a fashion that the next digital shareholder is also getting the buyback amount. Could you explain these two parts, please?
Yeah, so I'll answer the first part, and the second part Bala will answer. That yes, our intention and our plans are to improve the EBITDA of the business for the coming quarters to a level which is minimum double digits. So we are working on that. So you have to be a little patient with us. I've explained to you the circumstances under which the EBITDA has gone down this quarter. But I'm trying to see if by exit we can get to the number that you talked about. So that's on the EBITDA side, sir. And Bala, I'll hand it over to you to see to take the question on the buyback.
Thank you, Partha. So as far as the next digital transaction is concerned, that is something which is the acquisition of the business is being done on a non-cash basis without any cash outgo to the shareholders, because being through issue of shares. As far as buyback is concerned, we had the buyback amount based on 31st March balance sheet works out to about 975 crores. And that is something which will be done as permitted during sometime later this year, as permitted by Companies Act and SEBI guidelines for buyback and restructuring.
So, to be honest with you, both the answers are not convincible, but I have two follow-on questions. One thing, you have entirely ignored the cash which was standing in the balance sheet, and no proportionate was taken for the asset methodology. Secondly, Partha, on that interview, you were damn sure that the margin today is at 2 digits, and because of that, many investors entered into that. But it is not being restricted. I don't think so. At the level of yours, these kind of this is not a small negligence. You should at least put these points or give a statement after this your interview that a statement given by you was wrong.
I'm sorry. I think I mentioned that, yes, our intention is to bring the profitability back to a level which is at least double digit. I mentioned that.
Please go through your interview again once. Then. What do you have
I'm perfectly aware of what I said, and I'm perfectly aware of what I'm saying right now.
And the valuation? What about the valuation methodology which you have used for Next Digital? Because that company was not having cash. You were sitting with so much of cash, and still you only use the income methodology to value the company. Why there was not a proportionate? I think many large companies use both the methodologies.
Sorry, your question is not clear. Can you repeat your question?
So when you are valuing a company, there are three methodologies to do that: market value, asset value, and income model. The asset value, which is more because of the cash, was ignored when you were doing the valuation. So I was not able to understand why that methodology has been not being taken. Because if a company which is sitting with 7,000 or 6,000 crores of cash has huge potential, which is not and cannot be taken in the income model, and because of that, a 20% shares of Hinduja Global is given to Next Digital shareholders.
Yeah, let me take that. So the valuation which you are referring to, that was done by two independent valuers. It's not something which the company has done. This has been done by two independent valuers, and you would see the report, and they would explain what is the methodology they have taken and why they have not considered certain elements of what you're talking about. And so you need to look at the valuation report.
Thank you. Mr. Anand, we request you to follow back into the queue for more questions. Next question comes from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah, thank you for the opportunity. My first question is on the healthcare side business. So, as last time in the Q4 did mention that we will see gap filling in the line of 2 to 3 years. So, are we seeing any visibility for that? And my second question on the margin and revenue side. So, how much growth we are expecting for the revenue and how much margin we are targeting going forward? As currently mentioned by the management that we are optimistic going ahead, but if anything on the number side can be. Thank you.
We don't give specific number guidance, I'm sorry, but yeah. The next quarter, the margins on the next quarter, the coming quarters are expected to be much better than what it is today. And, growth also, there is good demand. So I think we should be seeing good growth going forward. Beyond that, I can't get into specifics.
Okay. And sir, on the healthcare business side
Sorry, what is the question on the healthcare business side?
My question is that as last Q4 did mention that we are expecting that gap will going to fill 2 to 3 years. So are we seeing any visibility for that?
Yeah, once we're able to pull off some of the inorganic acquisitions that we're talking about, then we should be able to fill up the gap.
Okay, thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Rahul Patalkar, an individual investor. Please go ahead.
Yeah, thank you for giving me this opportunity. Congratulations, sir, for the results. Again, a question to you is that as an individual investor, I can see that you are sitting on such a high cash pile, but the dividend that you have mentioned is not going to share the market, and it didn't earlier as well due to your when you sell off your healthcare business, and it's not going to help this as well. So how do you see that? How do you going to make the grounds for the individual investors like me?
So what is your question?
We want why the dividend is so less when the cash is so high with the company.
So there are various ways of rewarding shareholders. As of now, the buyback is the most tax-efficient way of rewarding shareholders. We've already announced that. And apart from that, there is dividend, and dividend is not a very tax-efficient way of rewarding shareholders. So we have actually increased. If you look at our dividend, it's actually much better than what we had given last time.
But this buyback is going on for over the 6 months now. It's kind of getting delayed every quarter, and we still don't hear the concrete plan. We thought it was 1,000 plus 1,000 crore plus plan. Now it's kind of I can see that it's around 972. So there's no concrete measures taken on the buyback as well.
So we have continued to repeat the fact that the buyback will happen in the second half of the year. And the quantum is 975 crores. We've reiterated that multiple times.
I get that, sir, but it's kind of not convincing, that when it's going to actually take in place. That's where we are actually waiting for the company's announcement.
Sorry, can you repeat that question once again?
Yeah, I was saying that we hear that yes multiple times about the buyback announcement, but when it's going to be announced and why there is no steps been taken in any of the earlier meetings to to announce the buyback and go ahead till date. We are still waiting for that announcement to become officially.
So there is a technical reason for that. Bala can explain that as to why we have to do something else first before we can announce the concrete plan for the buyback. So Bala, you want to mention that as well?
Yeah. Exactly there. The scheme of arrangement with Next Digital that was announced in the month of February of 2022, and we had already announced that the buyback would be based on March 22 balance sheet. If we had done the buyback on the basis of March 21 balance sheet, the buyback amount would have been substantially lower because the profits from the sale of healthcare business would not have come. That amount would have been somewhere in the region of about little over 450 crores or something like that. So to go back, we've announced the scheme of arrangement with Next Digital. And as per SEBI guidelines, when a scheme or a capital restructure is happening, essentially, as I said, there'll be an increase in share capital because of the Next Digital transaction. You cannot launch a buyback. So as soon as that is completed, we will do the buyback after the scheme is completed, which we have said, as Partha mentioned earlier, that we expect this to happen in the second half of the current financial year.
Okay, we'll wait for that, sir. Thank you.
Thank you. Next question comes from the line of Imran, contractor from Quantum Investments. Please go ahead.
Hello? Hello?
Yeah, hi, we can hear you.
Yeah. Hello. Do you envisage a change in the amount of the buyback, given that when Next Digital business gets consolidated and a balance sheet is made as of 31st of March 2022, the net worth of the company will also increase with the increase in the share capital?
Yeah. So we will look, you're right. So the effective date of the transaction with Next Digital is on 1st February 22. So we'll get impact of 2 months of Next Digital. If that has the bearing on the net worth, we will take that into account.
Okay. Do we have any idea about how is the performance of the Next Digital business which is coming into our company in the current quarter? I mean the June quarter?
Yeah. So this is a company whose results have already come out. So those are available.
Okay.
I can send them across to you, but
Okay.
results are available.
Okay. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Navneet Bhaiya, an individual investor. Please go ahead.
Hi, Partha, and hi, Pala. Congrats for a decent set of results. My question is regarding Next Digital. So this company has been in losses for quite a few years in the past, and I think the free cash flow has also been negative. So I just wanted to know, what's your plan regarding, turning around this company, or when this becomes part of HGS, this division, and, so that it's not a drain on the existing business of HGS?
So, Navneet, thank you for the question. So if you look at the year ended March 22 for Next Digital as a whole, it is actually recorded, it's a PAT positive, right? It's not there. It's not that the business is at a PAT level negative. It made profits of 1.97 crores. It is a business which has existing healthy margins at the EBITDA level. And obviously, we will, it's a business which is growing. It does require investments in set-top boxes, etc. But I think, based on what we have seen, this is a business which will do well in the coming years, and that will be overall margins of the company.
What's the kind of investment that this business will require on a yearly basis to sustain or grow the revenues? I can see the capex intensity is reasonable in the business. So have you drawn any plans for that when it becomes a part of HGS?
We are working through. So essentially, the bulk of the investment goes into set-top boxes. So those boxes cost about 1,000 rupees per set-top box in that range. So, and these are set-top boxes which are deployed at the customer premises for delivering channels, internet, etc. So that's the biggest capital expenditure for this business. And those growth plans are being finalized, and we continue to look at them and see what's in the best interest of the company.
So once the business becomes part of your company, I'm presuming you would repay the debt that Next Digital has, right? About 1,200 odd crores.
Yeah, so we'll have a look because, there is interest cost, there is a tax cover on interest, but we will see what's in the best interest of the shareholders, how much of debt we should pay or not repay. So that's a decision which we'll take at a later stage.
Right, thank you so much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. As there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Srinivas Palakodeti for closing comments.
Thank you, everyone, for joining this call on our Q1 earnings. And we look forward to interacting with you again in sometime in end October, November, or early November, when we come up with our results for Q2 of FY23. Thank you once again, everyone, for joining this call.
Thank you. On behalf of Hinduja Global Solutions Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.